Welcome to Islamic Finance Unboxed, where we break down one of the world's most ethical and fast-developing financial model. Whether you're a financial profession or someone interested in faith-based investing, this channel is for you. Today, we're starting with a core question: what is Islamic finance? And why is it getting global attraction? Like and subscribe now to get more accurate and compact information. These videos will be short and to the point. They will be the summary of the summary, because time is the most valuable asset. Islamic finance is a financial system based on Sharia rules, which emphasize fairness, risk-sharing, ethical investments, and the prohibition of interest known as riba. This is the fundamental issue. Are interest and riba really the same notions? It prohibits speculative activities, gharar, and ensures all transactions are backed by tangible assets. The current financial system clearly shows that non-tangible assets exceed tangible ones. It is clear that in this context, Islamic finance must navigate itself. So, rather than earning money from money, Islamic finance encourages to trade at first, profit and loss sharing through contracts like mudaraba, profit sharing, and musharaka, joint venture. It's not just for Muslims. It's a system built on justice and equity that attracts conscious investors from all backgrounds. Market size and global reach. Islamic finance is no longer niche. As of 2024, the global Islamic finance industry is estimated to exceed $3.5 trillion, and it's projected to grow steadily. Islamic finance could be seen as a quiet and steady port for hot money, especially when you compare it to the fast-paced and risky world of modern financial tools, like the crypto market. Does hot money like this? Countries like Malaysia, Turkey, Saudi Arabia, United Arab Emirates, Indonesia, and even Pakistan are global leaders. Yet the model is also expanding in non-Muslim majority countries such as the UK, where banks like HSBC and Standard Chartered have open Shariah-compliant branches or services. Turkey is home to both Islamic finance and conventional banking. The proportion of Islamic banks, also known as participation banks, is almost 8.5%. It's rising. Development areas and modern trends. Despite this growth, there's still enormous untapped potential. Many countries lack structured regulation for Islamic finance. There's a need for standardization, technology adoption, and product innovation. One trend gaining momentum is Islamic fintech, mobile apps and digital banks offering halal investing, savings, and financing tools. Blockchain and smart contracts are even being explored for Sharia-compliant use cases. Challenges and misconceptions. We are aware of the challenges. The first misconception is that Islamic finance is only for Muslims or outdated. Others question whether Islamic finance can remain competitive in a high-speed capitalist world. The truth? It already is. It's about offering ethical, sustainable alternatives. And as the global population becomes more aware of impact investing in ESG, environmental, social, and governance principles, Islamic finance is naturally aligning with these goals. It is argued that Islam promotes the trade, and good governed trade make balance for community empowerment. In terms of financial instruments, there are some similarities, as well as clear differences, between Islamic and conventional banks. The nature of credit tools differs. Islamic banks only provide cash credits for real trade or purchases, not for funding intangible assets or debts. However, the only deciding factor for conventional banks is the customer's credibility, not the purpose of the credit. On the other hand, there is no substantial or technical difference for non-cash credits, such as letters of credit and letter of guarantee. Furthermore, Islamic banks are in close competition with conventional banks over service costs. In terms of credit guarantees, there is total equality between Islamic banks and conventional banks. Another controversial cross-cutting issue on this topic is credit cards. There are some gray areas here. Are they halal in terms of Islamic law? Why can card owners not use cash as an individual credit within the credit card limit? One argument is that Islamic banks fund halal purchases with credit. However, credit card holders can also purchase non-halal items with these cards. Late payments also punished by Islamic banks without using interest notion. Is there any real difference based on this financial instrument? The principle of poorly described topics limits the development of the market capitalization of Islamic banks and their tools. These non-defined topics empower the bigger one, regular banks, not the smaller actors, Islamic banks. As of 2024, The global Islamic finance sector's total assets are approximately 4.5 trillion US dollars, while the total global financial assets worldwide are estimated to be around 300 trillion US dollars or more, depending on the metrics used for the entire global financial sector. Based on this, the Islamic finance sector represents roughly 1.5% to 2% of the total global financial sector by asset size. These stats are affected by global trends in financial sectors. In 2008, the global mortgage-based derivative market crash has risen the Islamic finance a little. However, drastic increase of cryptocurrency market again negatively affected Islamic finance sectors. Furthermore, there are ongoing discussions regarding the practicality of the stock market from the perspective of Islamic banking. The stock market is commonly understood to be an environment in which fund holders can leverage their financial resources. From a technical standpoint, this is acceptable, as there is an exchange of assets between individuals. However, the decision as to whether the action is halal or not is determined by the economic interests of shareholders. Should the shareholder-supplier company operate within the halal sector, this would be acceptable. However, if they do not, it appears that stock market earnings are not categorized as halal earnings. It's about ethics over exploitation, partnership over speculation, and community over chaos. The end goal is to get society to be more well-ordered. As the world faces growing economic inequality, inflation, and trust issues in traditional systems, the Islamic model offers a powerful alternative not just for Muslims, but for everyone who believes in fair finance. The human and faith perspective. A fascinating shift is happening. More people even within Muslim communities are questioning how to balance their faith and financial goals. There is a possibility that societal pressures are not being fully addressed by current financial instruments, and this may be in contrast with Islamic principles. In the modern business world, how can they be optimized and harmonized? Many younger Muslims, educated in both modern finance and Islamic teachings, are seeking tools that help them invest without compromising beliefs. As interpretations evolve, faith-based finance is adapting, and many Islamic scholars are issuing updated fatwas to address emerging financial tools including ETFs, crypto, and digital leasing. Thanks for watching. If this perspective intrigued you, subscribe to Islamic Finance Unboxed for deep dives, expert interviews, and real-world applications of Islamic economics. In our next video, we'll explore one of the most fundamental concepts in Islamic finance. What is riba, and why is it prohibited? Don't miss it. Let's unbox the future of ethical finance together.